I'll wait another minute or so, guys. It looks like we've got 2 people in here today. Let me know if you cannot hear me. My computer is giving me a message that I had an issue with my audio. So I want to make sure that before we get started, if there's an issue, I may have to restart my computer just to see if that helps it. But right now I've got 2 people, Khalil and Rosie. It's 10:01. I'll wait another minute or so. If nobody else logged in, we'll start. We'll go back and I'll talk about the stuff we're going to do today and also about the week ahead. All right, so just real quick, can both of you hear me, Khalil and Rosie? You can unmute yourself if you can hear my voice. Just want to make sure that you guys can hear me.
Now I can hear you.
Is it okay? Cool. All right, well, let's start. Maybe it's just one of those days. It's a Monday. I have no idea. Maybe there's a Zoom issue. I don't know. Let me go over a couple things first regarding what's going on this week. So today, I would like to go ahead and wrap up chapter 5. I went ahead and updated the due date in Connect. So it should say Sunday, October 25th. So this Sunday, you guys have till Sunday to get all of your chapter 5 assignments completed. And so I want to go back today. In a moment, I'm going to share my screen and I'm going to open up the a couple of the problems in Connect. I think last time we were on a worksheet problem. So I want to go back to that just to make sure you know how to use that worksheet. So I like to work through a couple of those problems with you today. and then to see you know, if you guys have any questions. I don't intend to start chapter 6 just yet. I don't think we'll get through it all, but if we do, that's a possibility. And I also wanted to give you a heads up on this Wednesday. I guess that's the 21st. Today's the 19th already, so the 21st. There will be no meeting for our class on Wednesday. I have to attend a meeting, another meeting. It's an ethics seminar I have to attend for my CPA license. So this coming Wednesday, there's not going to be any virtual meeting. And again, I'll post that in Blackboard. But I wanted to give, you know, who's ever in here today a heads up. After today, which I do think we'll finish 5, is we will start chapter 6 a week from today. So that'll be the 26th. So we'll start chapter 6, I believe, next week, and then that'll finish the cycle. And so that's essentially the plan. So again, I'll probably make another announcement towards the end of our session today, just so whoever logs in a little bit later, if they didn't hear what I just said about Wednesday's meeting. So again, so what I'm going to do, let me go back. I'm going to share my screen, and I'm going to go back into our Connect homework. So I think that's probably one of the more effective ways to show you what you need to be doing with this stuff. So let me make sure we got the right screen up. All right. So I'm going to go into the student view, but just again, just to emphasize again, I think I've been telling you guys ahead of time anyway, but you'll notice that again, the chapter 5 homework and quiz, I updated those due dates. It's now due again, October 25th. All right, so what I'm going to do is I'm going to get into the student view, and let me go down to the chapter 5 homework. And I believe we were on number 3. I think I was on problem number 3, so let me get to that problem. Yeah, so again, and I just want to emphasize, I do not test you guys on worksheet, the concept of a worksheet on any quiz or any exam, but you do need to know how to use it to complete some of your homework problems. So on this problem, think of the worksheet as simply just a tool on how they want you to go from your, once you've recorded your adjusting entries, how that actually affects your financial statements. That's kind of like where we're headed. So hold on just a, yeah, Antoine, yeah. I'd said that at the start of the class. One person can't hear me. Is anybody else having problems with my audio right now? Other than I got Antoine. Well, I think he just logged back out. Maybe he logged back in. But if everybody else, I guess as I'm speaking again, send me a chat or let me know as I'm going through this homework problem or anything today. Let me know again if you cannot hear. All right, so let me get back. So on this problem, what we had done is I believe I had went ahead and I had entered the adjustments into the trial balance. So let me just do that real quick for you again. So they gave you the accounts with their initial balances, and the goal was is to enter the correct balance on the correct side of the equation. So a normal balance for all of your asset accounts should be debit. So you're really just copying it down. So again, accounts receivable was 22.5. You had supplies of 9,000. Prepaid insurance was 8,200. The equipment was 91.5. There was no accumulated depreciation. Accounts payable was 16.7. And then let's see, the capital balance was 81,950. Notice I'm putting all these on the correct side, whether it's the debit or the credit side. Fees income should be credit. That's 117,000. And you've got rent expense of 10,006. And then salaries expense of 10,850. So you'll notice at the bottom is once you enter these, this is really just a review, proving that your debits equal your credits, and also to know that you should enter the balance on the correct side of the debit or credit, whether it's an asset account, which are all debits, liabilities and capital notes, those are credit, fees income is a credit, and then of course your expenses are on the debit. Again, this is just your debit and credit rules. So that is how that's how you would start this particular worksheet. So then they gave you 3 adjustments. And I think this is kind of where we were at last time, was showing you where you'd put these adjustments into the worksheet. So again, don't forget, you'd still record these in a journal, but again, I'm just showing you how you'd use the worksheet. So let's go back through these 3 adjustments, and then I'll show you how they want you to adjust it. So you've got supplies used during January was 5,700. So that'll be a supplies expense adjustment. So what you would do is you find your supplies expense in your adjustment column, and you'd enter 5,700 as a debit. And then for the supplies account, the asset account, you'd enter a credit balance of 5,700. For expired insurance, which is 2,050, that would be insurance expense. You'd enter that in your worksheet, and then you credit prepaid insurance. Again, that's 2,050. And then depreciation was 1,850. So just enter your 1,850. You would debit depreciation expense, and of course credit your accumulated depreciation. So in this problem, they actually gave you all of the adjustments. You just had to put the right debit or credit into your adjustment column. So the way you would finish this worksheet is, notice you then have the next title that says adjusted trial balance. You basically would take your initial trial balance and then either add or subtract these adjustments and then produce a new trial balance. So on some of these, you would just literally just copy over the balance if there was no adjustment. So for example, for cash, you just enter 63,000. And again, accounts receivable, 22.5. For supplies, you'll have to do a calculation because you had 9,000, and then you're going to credit it for 5,700. So that would leave you, I believe, with 3,300 you would have left in supplies. So you'd put that balance right here as a debit. And then for your prepaid insurance, you'll notice you started with 8,200, and then there was a credit of 2,050. So that would take you down to what, 7,000, I guess, 950. I believe that's the number. That might have, if I'm wrong, we'll go back and check it. So that would be your balance there. Equipment's the same, that would be 91.5. Accumulated depreciation, you kind of carry that over, that's 1,850. And then let's see, as I keep going, I'm just copying them over for accounts payable. 16.7, capital, 81,950, fees income, 117. Then you got rent expense, 10.6, salaries expense, 850. And then we've got the new ones. You have 5,700, 2,050. And the last one is 1,850. And no, we're not balanced, probably because I didn't do my math right. Yeah, I think that should be
6,150.
It's actually, hold on, let me check. I was just doing it in my head. Hold on a second. Let me double check my math. Oh, yeah, I'm sorry, 6,150. Did somebody say that? Yeah, there you go.
Yeah, I did.
I'm sorry. Yeah, you're good. I'm sorry. Yeah. So in this case, you'll notice that that was just this. I just did a calculation in my head wrong. So 8,200 subtract out 2,050 is actually 6,150. But notice that when you do this adjusted trial balance, it now includes the adjustments. And notice that your debits then equal the credits. And of course, since I screwed that one up, you notice when I entered the wrong number, at the bottom here, it wasn't balanced. So clearly, if you did that, you'd have to go back and just double check your math. But having said that, this was just what they call a partial worksheet. So once you get to this step, and then I'm going to bring up another problem in a moment, and we'll do a complete worksheet. But once you get to this step, your next adventure really is to then produce your financial statements. You can do an income statement, you can do your equity, and then your balance sheet. And so I'm going to get to another problem. I think it's number 6 and number 8 today, which are doing those worksheets. just to show you what you're going to have to enter. So this is kind of like, in a way, you can think of a technical thing, at least to know how to use a worksheet. And it's just a tool that we're using in this book. The likelihood that you would use a worksheet in a real world, in a business setting, is probably never going to happen. But it's just to show you how the adjustments affect the accounts and how you would then, again, update the accounts. All right. All right. So are there any questions on anybody in here today about what I just put up there on the worksheet? All right, if there's no questions, let me go to I think it's number 6. I was making some notes on this today. Yeah, let's check this one out. So here's another one where, again, this is number 6 in your homework, where they've already given you a worksheet. They've already given you the trial balance. And what our job in this problem is going to be is, again, we're going to enter the adjustments into the adjustment column. We'll do an adjusted trial balance. And then I want to show you, again, at least on the worksheet, how to get to this income statement and balance sheet, how you do that. Okay. Look and see if there's a question. Yeah, Antoine, again, just in case anybody's wondering in terms of due dates, again, all the Chapter 5 stuff is due October 25th. So you guys still have till Sunday to get that done. All right. So they give us in the requirements, as I'm reading through this, right up here, it says complete the worksheet by making the following adjustments. It says supplies on hand at the end of the month is $4,200. Expired insurance is $5,500, and then depreciation expense on equipment is $1,600. All right, so let's just do these one at a time, and then let me know if you have any questions as I go through this. So again, as I page down, we've got all the accounts, and our first one is going to be to deal with supplies. So right now, supplies is at $39,400. So let me give you another visual on this, another illustration, because again, I know accounting can be very abstract. So that's why I like to use T accounts. So let's say we're in this problem right now. So let's just say I do a T account and I wrote down supplies. So this is essentially your ledger. So right now they're saying that right now your balance in supplies would be $39,400, and notice I'm putting that on the debit side. Now it's set up in the problem that they did a count and there is $4,200 of supplies left at the end of the period. So $4,200 of supplies left. So do the math. If we've got 4,200 left, that means somebody did a physical count and came up with this as this is what is left at the end of, I guess this would be at the end of January. So the idea would be in your ledger account, you want that ending balance to actually be equal to what they counted, which is 4,200. Okay, so essentially, if you were to go from 39,400 down to 4,200, the difference is what they used, and that, of course, is what you're going to make the adjustment on. That's going to be your adjusting entry. As I kind of look at this, that's actually a lot amount of supplies used, but that's just what it is. So if you take the 39,400 and subtract out 4,200, that gives you $35,200. So 35,200 is what they would have used. So if we were doing a journal entry, that would be our adjusting entry. We would debit what supplies expense and credit supplies for that 35,200. But for this problem, they just want us to enter these adjustments again into this adjustment column. So we'll do that. So for supplies, I'll go ahead and put in a credit right there on the credit side, 35,200 right there. And then I'm going to go down, I'm going to find supplies expense and enter the debit right there. So there's your 35,200 right there. That's what you'd have to do for that first adjustment. We got 3 of them we have to make. So this is how you would do the one for supplies. Are there any questions on that? What I just showed you? Okay, good. So let's go back up. The second adjustment, they actually already, they did the calculation for you, and they say expired insurance is $5,500, so that's your expense. That's going to be your adjustment. So I would find the prepaid insurance, which is right there. And of course, you're going to be crediting that. You're going to be reducing your prepaid, and then of course, increasing your insurance expense. So, and again, the amount is $5,500. So prepaid, where am I at? Prepaid insurance gets a credit of $5,500, and then insurance expense gets a debit of $5,500. So that's all you do. You just have to enter those two amounts, and that's all you got to do for this adjusting entry. So again, here's your insurance expense, there's your debit, and then here's the credit coming from prepaid. So that's this is your second adjustment. And then the third one they're going to focus on is the depreciation, which is $1,600. They went ahead and just gave you that number. So again, find depreciation expense, which is right there, and enter $1,600 debit, and then go to accumulated depreciation equipment, enter that credit, and then that's it. And then notice, just for accounting purposes, debits equal credits. We've got the three expenses, we got the three assets adjusted, and that would be your adjustments. That's it. So at that point, just like I showed you on number 3, you'd want to then do your adjusted trial balance. So just carry these numbers over. You take your initial trial balance plus or minus any of these adjustments. So, and again, some of these, if there was no adjustment, then you just copy the number over. So for cash, it's just $105,000. You just copy it over. Accounts receivable is $21,800. And then you get to your supplies. And then I think that was what they say, $4,200 is left. So that should be your balance right there, $4,200. On your prepaid, what you got to do is you got to take that $66,000 and then subtract out $5,500. So that gives you $60,500 again as your debit balance. Equipment is the same, $109. Accumulated depreciation, again, just copying it over. And then accounts payable, same thing. And we've got capital, $253. And then the drawing is the same, $15,400. Debit, fees income. And then again, the rest of these, all I'm doing is I'm just copying them over, $35,200. And we've got insurance expense, $5,500. Salaries expense, $32,200. And then depreciation expense, $1,600. One more, utilities, $4,200. And you know you're probably okay as long as your debits are equal to your credits. So we got $394,600 equals $394,600. So again, this is all of your initial trial balance accounts. We updated, we had 3 adjustments, and then now you've got your adjusted trial balance. Okay, so this at this point, this is really the same as that problem number 3. Now, what this problem does, in addition to what they did in problem 3, is now they want you to enter the income statement amounts and then the balance sheet amount. Okay, and so again, this is again how the worksheet would organize. I'm just showing you how you'd organize it. We've already done these financial statements, so that's not new. So let's just go back to the simple review of an income statement. So what goes on the income statement is revenues and expenses. So if I go to this income statement column, I'm not going to worry about any of these accounts up here because those are all your assets.
So what is it?
So I'm going to go to fees income, which is 114.2, and I'm just going to copy that over. So here's how they'd want you to do this. So on the fees income, I'm going to start there. And notice I'm just going to enter 114,200 on the credit side. So that's how you have to enter. And then I'm just going to copy over the expenses. You've got 35,200. You then have insurance, of 5,500.
I thought
I'm trying to mute everybody because I hear some noise in the background. So I'm not going to go back. So let me mute. If you have any questions, let me know as I go. Once I get done with this, then I'll pause and I'll see what questions you have. But again, I'm just walking you through how to complete this worksheet because we've never done that before. And so again, just so there's no distractions. All right, so salaries expense, you got the 32,200, and then depreciation, which is 1,600, and then utilities, which is 4,200. Okay. Now at this point, make sure I've entered them all in. Okay, so we've got all those in. So here's what you're looking at. So on this income statement, notice you got a debit and a credit column. Notice when you get to the bottom here, you've got debits and they don't equal the credits, okay? And they shouldn't, because the difference is going to be either net income or net loss. So if you were to actually prepare an income statement, you would show your revenues and then you would subtract out your expenses. And in this case, if I take the difference, which I'll do that right now, the difference between 114,200 and 78,700 is 35,500. So I'm going to go ahead and put that right here, 35,500. And just to show you that that's going to represent essentially, I'm going to put this right here, that's going to represent your net income. Notice what I just did is there's a cell right down here in your worksheet where I click this drop down arrow and I clicked in net income, and that's really referring to this amount right there. That's the difference. That's that 35,500. So at that point, of course, you've got debits equal credits. Now, to do the balance sheet, at the balance sheet part, again, I'm just going to copy over all the accounts again from the adjusted trial balance. So again, just copy it. So 105 is your cash. 21.8 is your accounts receivable. Your supplies is 4,200, again, debit. Prepaid is 60,500. Equipment is 109. You've got accumulated depreciation 1,600. You've got accounts payable 25.8. You've got capital of 253. You've got drawing of 15.4. You've got fees income of 114. Oh, sorry, that doesn't go on the balance sheet. So, I think that's it. Yeah, so guys, so at that point, I think that's it for the balance sheet. I just read them. So once you get down here to the capital account, actually right there, notice that's 253. And so at this point, that's really it on everything for your balance sheet. Now, again, when you get down here at the bottom, you'll notice again that with your balance sheet, I'm trying to get my arrow on. On your balance sheet, you'll notice again that your debits do not equal your credits, okay? And so at this point, again, let me do my calculation. So at this point, there's a lot of these little things you got to enter into this worksheet to get your numbers in there. All right, so at this point, the difference between these debits and credits is going to be that 35,500. So, and essentially that's going to be kind of like what you call the increase or the change in your overall capital eventually when we get there. But what they'd want you to do is you'd put this 35.5 and you'd enter it right there. Right there. And at that point, you'll notice that you are balanced. If you notice the effect is then you've got 315.9 equals 315.9. Now, the only thing when you're doing this particular worksheet that you could say might be incorrect is this 15,400, which is your drawing, you got to put that somewhere, so they make you copy that over. So at this point, though, everything else is how they'd want you to enter it into this worksheet. And again, they're calling it a partial worksheet, but the idea here is I wanted to show you a problem and walk you through it in terms of all the different cells you've got to enter when you actually complete this particular homework assignment. All right, so let me pause there. All right, questions on what I just entered? Anything in terms of what I just showed you? on this partial worksheet from anybody? Looks like there's an analyze question, but well, you guys can answer that. But does it make sense in terms of all the different things you've got to enter? It's really just, you're doing it manually. Most of the stuff, you know, in the real world, it's going to be updated automatically whenever you do your records. But the worksheet, just for our purposes, we're just using it as a tool to show you, once you've adjusted your accounts, then you prepare your financial statements, which is, of course, the income statement, and then eventually we'll get into the balance sheet and so forth. All right. Okay, questions on anything in terms of what you got to do, because in terms of doing this worksheet, because this is number 6, and I believe number 7 and 8, you have to also do another worksheet where they're going to have you do this pretty much the same thing, except they're going to have you do all the financial. They're going to actually make you prepare a financial statement in addition to the worksheet. You'll just use the worksheet to get the initial numbers, and then they're going to go back and have you actually do the rest of the financial statements. But any questions? Let me pause for a moment to allow you guys to ask some questions, or see if there's something that looks kind of weird or you don't get, let me know. If not, that's great. All right, so let me just show you a couple more things. This was number 6. And then number 7, I think number 7, they've already, number 7, they've already shown you a completed worksheet where you just have to prepare the financial statements. But here's the one, this is your last homework problem, where kind of like what I was telling you earlier, is you'll notice it's just like this one I just worked out with you. And it's where they've given you the trial balance, you do the adjustments, you then do the adjusted trial balance, and then they want you to do the income statement balance sheet. And then you're going to have to click a cell here for your net income. That'll be for the amounts that you do for your income statement over here. Okay. Now, once you complete this particular worksheet, you'll notice the requirements of the problem is they want you to actually prepare an income statement, an equity statement, a balance sheet, and then they want you to go back and actually do all the recording. They actually record the adjusting entries for all of your adjustments that you actually put on the worksheet. Then you got to post, all right, just like we did earlier. And at that point, they have a couple questions in terms of just what's your net income and so forth. Okay. So again, I'm not going to work this whole problem out because I think this is one you guys need to do. But are there any questions? There's one more problem I want to show you in a minute. But are there any questions in terms of just the worksheet in general? Because you know this is just, again, a tool that you need to use, know how to use to do your homework. You still need to know the concept of adjusting entries and how to record adjusting entries and their effects. But are there questions? Anything at all on the worksheet? And if not, that's fine. So again, I just want to give you a heads up on this is what number 8, where you guys have to actually go in and again, do what I just did, but all the adjustments are right up here. They got supplies, prepaid, rent, and then they make you do the depreciation. Oh, let me give you a heads up on this depreciation, because I don't think they're very clear on this one, on the depreciation at all. They don't give you much information, but this is again number 8. When you get to the depreciation adjustment on number 8, they tell you that it's a 10-year life with no salvage value. Okay, so what you got to do, I'm trying to get my mouse working here. Okay, there it is. So what you have to do here is you have to go down, find the equipment account, which is $67,200. So notice that they have not recorded any accumulated depreciation. So this is going to be for the month of January. So you'll take this amount, which is that $67,200, and you got to plug it into that formula. And that formula being the straight line method, which again is, remember, it's cost. You take the cost minus the salvage value and then you divide that by the estimated line. So what you'd have to do on this one, just to kind of give you a heads up, is you'd have to take that 67,200 minus 0 and then divide by the life. So 10 years, of course, is 120 months. You basically would be dividing by 120. So, and I don't think they were very clear. They didn't give you much information in terms of, other than that, of the equipment or when they started to use it. So sometimes they just kind of think it's implied. I don't necessarily think it should be implied. I think they should tell you exactly what you need to be doing with this. So it's the equipment account. Again, is how you're producing that depreciation allocation, that adjustment. So you have to do that when you do the adjustment for your depreciation expense. So the other ones I think are pretty self-explanatory. But, all right, so I'm going to leave this problem, but are there anything else or anything at all? You guys feel quiet today, but that's fine. Maybe some of you even already worked this problem. I don't know. I haven't checked the assignments yet. But was there any other issues at all with chapter 5 on number 8? All right. If not, one more problem. I'm just going to go back to problem I really like is number 4. All right. So just remember, and this is going to conclude my talk today on anything on adjusting entries. So remember that adjusting entries have to be prepared and recorded before you do your financial statements because they affect your income statement and your balance sheet accounts. So here's a problem. Just they're trying to make this point. So if you look at this, they tell us. It says assume that a firm reports net income of $135,000 prior to making adjusting entries. And so they had adjustments of rent, which was $10,005, depreciation, which is $12,300, and then supplies used, which is $5,400. So the idea here, draw an illustration. So remember, when you're preparing your income statement, it's what revenues minus your expenses equals your profit. Of course, we'll say they had net income in this problem. All right. Now, the net income here is $135,000, but we are missing several expenses. We're missing them because they didn't prepare them. So the question says, assume that the required adjusting entries have not been made. What effect do these errors have on reported income? So think of it like this: you've got expired rent at $10,500. That's an expense. Remember, that would be rent expense of $10,500. You've got depreciation expense of $12,003. I'll write this out: depreciation. And then you've got supplies expense of $5,400. So again, not to just give it away, but essentially they've got 3 expenses that they did not report. And so these are missing from your income statement. So obviously, what would be the effect? How would these expenses affect net income? Would they increase income or would they decrease income? What do you guys think? If you add them up, it's $28,200 the total. So total expenses. So the idea is obviously net income would be overstated or understated. Any ideas? Because they make you click it. You got to click either overstated or understated. Any guesses from anybody at this point? 50-50 chance if you said overstated or understated. Right now, income would be overstated, right? By whatever that amount would be. Right. All right. So again, that was just a problem, not a long problem, but just to show you that that, you know, if you fail to record adjusting entries, they impact your financial statements. What they didn't ask, which I wish they kind of have done in this problem, is they didn't focus on the balance sheet, because they could have also talked about the asset accounts on the balance sheet in terms of how they would also be overstated, because you would have needed to have adjusted those accounts, supplies, probably prepaid, and of course accumulated depreciation. And those accounts, once they're impacted, would actually reduce your asset accounts as well. Okay, all right, so that's it. So final thoughts on anybody, on any issues anybody's having with chapter 5 at this point. I'm at 10:38, so I got about 12 minutes, because I want to again talk about a little bit about the next chapter and the rest of this week in terms of what you need to be doing, and also for our next meeting on Monday. So are there any questions, any issues, anything you'd like me to go back over on any of the adjusting entries in chapter 5? Okay, fine, cool. All right, so you know what you need to be doing this week. So you've got chapter 5, all assignments in chapter 5 due by Sunday. And I've already worked through a lot of these homework problems, but again, you got to get the homework and the quiz are due by Sunday. Now, I said this at the start. Some of you weren't with me right at the beginning, but I have something I have to attend on this coming Wednesday, which is the 21st. So there's no virtual meeting this Wednesday. So in effect, our next live session will be a week from today, which is October, I guess, 26th. All right. So it's kind of a nice transition, since I'm going to talk a little bit about chapter 6 in a moment, but again, just make sure I'll send out a reminder in Blackboard. Again, no meeting until next Monday, because I have an ethics session I got to attend with my CPA license, so I can't attend Wednesday. So this is our only session this week, but this was kind of wrapping up chapter 5. So if there's something that comes up this week, email me, or you know, we got the tutor too. You can schedule a meeting with an online tutor if something's having some issues with chapter 5. But all the chapter 5 due by Sunday. In a moment, I want to show you, if some of you are a little bit ahead, what we're going to be transitioning into when we get into chapter 6. I'm going to bring up something in a moment here. But so just again, a reminder, no live session on Wednesday. All right, now let me show you something. So let me go back, maybe change my screen here, and let me erase my drawings. And so here's where we're at. So here's what's going to happen. And I'm going to actually bring up my whiteboard. Let me share my whiteboard. All right. So here's kind of what the idea here is. So let's dial this back. All right. So almost like I think I need a bigger desk. All right. So let me get my count. So the idea here is we have gone from journal to the ledger to the financial statements. All right. So again, I'm just trying to illustrate this just so you can get a visual. So we did in what we're doing or finishing in chapter 5 is this thing called adjustments. And remember, the adjustments are also entered into the journal, and then of course posted to your ledger, and then of course you then do your financial statements. So what's left? So in chapter 6, we're going to be exploring the concept of what they call closing. We're going to be closing out the accounts. And I also like to think of chapter 6 as you're essentially going to be resetting the accounts to get them ready for the next period. So you have to imagine, before we get into chapter 6, you have to remember most businesses divide their financial statements into different time periods, usually by month. And every month they track the revenues and the expenses. They do it by month. So what the accounting department typically does is, and some of you may have heard of this, they call it, you do what they call a monthly close. And what a monthly close is you go into the ledger and you're going to close out certain accounts, all right? And I like to think of it as also not necessarily as closing out, but you're resetting these accounts. And typically, this is done by time period. Okay, it's all about this time periodicity assumption. So the accounts we're going to be looking at in terms of resetting are what they call your temporary accounts. Okay, temporary accounts are essentially the accounts that are on your income statement. Okay, and there's one more. It's called the drawing account, but I'll get to that a little bit later. But the idea that we're going to pursue in Chapter 6 is, let's say you get to the end, this issue's this month. We're almost done with October. We got a few more days to go in October. What's going to happen then at the end of October? You can imagine then from October 1st through October 31st is a time period. And so within this time period, we're going to produce our financial statements. After you've done the financial statements, then we're into November. So what the accounting people do is they take certain accounts in your ledger, and we're going to be resetting those accounts so that they start from zero once you start into November. So you'll have November 1 through November 30th is another time period. And each time period, you want to reset these temporary accounts because they're going to accumulate, but you're going to track them. You start over each period. And so what are the temporary accounts? Of course, it's your revenue accounts and your expense accounts. All those accounts are essentially going to be zeroed out. You're going to zero out those accounts in your ledger, and there's going to be some they call closing entries. And to make an account go down to zero, essentially you're saying you're not done with it completely, but that means that it's ready to start over into the next period. But then the next thing that's going to happen is once we reset those accounts and make them go to zero, we're going to be transferring those balances. They got to go somewhere. Well, all those balances, all your revenues and all your expenses, all those numbers are going to be transferred essentially to the balance sheet, the capital account. Okay, that's essentially where we're headed with it. So when I bring up the PowerPoint, I'm just going to show you real quick. I'm not going to, because we're going to go over all this next week, but I'm just giving you a preview. So what's going to happen then in this time period, get my stylus back on, is we're essentially at, or near, we're essentially at the end of the cycle. So we're going to be essentially on what they call step 7, where we're going to be journalizing and posting the closing entries, and then eventually getting to what's called a post-closing trial balance, right? And in between, they do introduce a brand new account, which again, I'm not getting into today, but there's a couple other things we'll do to show you how you do the closing. It's not a hard thing, but you just have to know the differences between the temporary accounts and what they call the permanent accounts. And I believe the textbook mentioned this in chapter 3, I believe, but you don't really apply it until chapter 6. Okay, so that's kind of like what we're going to be getting into next Monday, is wrapping this thing up and getting into the closing aspect, and then that's going to essentially complete the cycle. So then what we do after that is we'll probably spend a day, once we finish chapter 6, I've got a comprehensive problem. It's your class project that you're going to do, that essentially is going to do all, you're going to do all the steps in the cycle, from literally chapters 1 through 6. And so we'll probably spend at least 1 or 2 class periods. I'll kind of get you started with it and show you what you need to do. But then you're going to apply those steps once we get through with the chapter 6. And of course, there will also be an exam coming up too. But again, that's probably in a couple weeks. So, but this is where we're headed. So for some of you, if you get done with your chapter 5 stuff before Sunday, what I would suggest you all do is watch my lecture video in chapter 6 in Blackboard, and that way that'll kind of give you a jump start into what we'll be discussing again next Monday. Okay. All right, so that's all I'm going to talk about today in chapter 6. It's not a difficult chapter. It's just the concept of you got to reset some certain accounts so that you can use them again in the next period. And I got to mention the concept of time periods, because accounting is all about periods. All right, so I've got a few minutes left. I got about 3 minutes left. So are there any issues or questions in terms about Wednesday? Again, no live session on Wednesday. Our next live session will be a week from today, which will be into chapter 6. Okay, but does anybody have any questions about what's going to happen this week or even next week? And if not, that's fine. Just make sure you don't get behind. I mean, some of you probably realize accounting, if you get behind in one chapter, and it's kind of hard to catch up. But the nice thing, hopefully, at least with technology, is I've already recorded all my lectures, and all my sessions are recorded, so you can always go back and replay any sort of lecture assignment or lecture session in Blackboard. And so hopefully that's another good resource. And we also, I think, have a pretty good accounting tutor system online as well. I've had some good reviews on it. So, but any comments, anything at all from anybody? Is everybody okay? Anybody not okay? Again, we had 4 people in today. I think total we had 6. So I don't know if it's just Monday. So I'm going to put an announcement out there in Blackboard today, just to remind everybody that our next session won't be till a week from Monday. And again, I have nothing I had to get something in. I had a meeting. I had scheduled this meeting probably 2 months ago, and so I can't get out of it. So it's an ethics seminar I have to attend for a few hours this Wednesday morning. So I can't be with you guys this Wednesday. So our next live session will be a week from today. So, all right. So if there's no questions or any issues, I hope, let me know if you have any issues with the worksheet when you attempt the homeworks, if you haven't done that yet. So worksheets can be a little quirky. You just have to know where to enter the right numbers. So if there's nothing, I'm going to wrap this up then. I got 10:49, it's almost 10:50. So I know it seems like a short week, but anytime, we miss a day, a session, that makes it essentially only one session a week. So, all right, so I'll do that. I'll go and wrap this up. I'll get this thing posted, this session today posted on Blackboard probably in about 10 minutes. And then just email me this week if you have any questions about this week's assignments. And then by all means, get ahead of me. Start chapter 6. If you get chapter 5, then go ahead and start chapter 6. And then that way you're ahead of me going into next week. So, all right, guys, if there's no comments, no questions today, that's fine. Last chance. All right, cool. We'll see you all, I guess, a week from today. All right, guys, have a good one. Have a good day.